Okay, today we're talking about trends a bit more in depth. So we're just going to get a quick overlook of what's going on so we understand this move. Back here was a base of a move, a hold level that was from the past. So it broke the base of the move, obviously fell straight through. And I've simply marked on the upper side here, the hold level, kind of its maximum profit cap range, where we can see this on the hourly. If we were to go to the 4-hour, we can identify it. So just doing a quick review on profit capping, just to make sure everybody's on the same page. You can see there's a 4-hour level here that has been tested. And there's nothing really that we're saying, okay, look, there's a 4-hour level there. This one, different story. Here's a great 4-hour level here. These are just all old levels from the past. Just disregard them. They're just things that I have never updated yet. Just things from the past. So anyhow, we could see like, okay, this would be valid to mark this 4-hour level as a profit cap range if we kind of break out of this right here, right? Like if we break out of this range here and we break trend, we can possibly come up to this level here. So this is a scenario where you use a 4-hour, but in the scenario we're in right now, using this as a 4-hour doesn't work because you can see it's even after it's broken over, it's still kind of wicked up and down here on a smaller time frame, and then even then it goes back and tests something else inside of here. So the 4-hour is not really relevant anymore. Not as a strong enough level to justify a short there. This one is though, right? So just profit capping this move, we can see that we need to find where the break in this move happens. So you can go to the hourly, and then you can see a very, very easy to mark 1-hour level as to where that 4 hours somewhere else there. And this was the base of the move. There's a 15-minute level here, somewhere in here. So we're going to go further back and look at that. Anyways, the profit cap on this move here is 92.44. Break a trend, do something like that, go up to there, disregard the 4 hours. So when I'm profit capping these moves and I'm looking at, okay, well, where can this thing go? The 4-hour up here is justifiable. The 1-hour right here is justifiable. There's no justifiable 4-hour part inside of here because of the reasons we had discussed, right? It's just not a clean enough level and all these things. And then you can go down and break your time frames down even a little smaller here. And we can kind of increase the size of our chart. Again, this was the base of the move in the past, which also coincides with the smaller time frame hold level. You've got a 15-minute and you've got the hourly. So if this right here were the 15-minute, it had already been tested and it laddered to here. So you can see that there's a possibility that the 15-minute is the level. And then you do have the hourly right there anyway. So you can kind of start there to understand where the top of this move can be and then go to further define where you think the buy might be. So for example, you would go down to your 5-minute charts and you can say, okay, well, you've got the 5-minute level here and you've got a 5-minute here. So you've got kind of two different parts of this range. You've got the hourly part of the range and the 15-minute part of the range. And really just going to go down to the 1-minute candle and just find the greediest piece. Maybe there's something that's really great in here that just simply hasn't been tested. So this has, which leaves you this hasn't, which is that hourly level. So I do think this is a pretty good buy here, 45 to 42. So you'd front run this at 39 or 41, some mark in between there. That hourly level doesn't have anything really higher than it in terms of greedy 1 minute. You have this, but you also have this, right? So you do have two levels here. This kind of value has already been tested here. This one really hasn't. It kind of has a little thing right there, but again, it's also coinciding with the hourly. So profit capping this move, you really would just take the hourly here, as it's only $3 away. And then you could also take this here. So you could profit, your buy would be somewhere between 1, 2, and 3. Those are your 3 levels there. And above this, there's nothing. Even if this were to go to the extreme 1-minute level, which is right here, I don't think this is going to be what actually holds the move down. I think if you hit this level and start holding over top of these bigger levels here, I think you're going to end up breaking up. So this would be like a very extreme knife catch, but it would have to rip right down and not. Like it can't come here and then start holding over top of this stuff because like this is a 15-minute, it's holding over top. So it's hard closing a 15, hard closing an hourly. So you can't be in this move in this moment when you have quite a few different levels. And if 92.54 does hit, if that level does indeed get hit, it has to knife catch it straight down. You definitely want to be breaking below these ranges over time, right? Like this is a 15-minute level. Disregard the text too. They just Binance. We're just going to copy and paste a few levels here, and just so we don't confuse any kind of text notations here, annotations. This one, we're just going to disable the text. Just some stuff I had put. Even all of them, they just stay on for some reason, which I find really weird that it stays on by default. But anywho, you have this level here, this level here. You definitely don't want to be closing over top of this 15-minute level long term. Like if you're going to knife catch this thing, it's got to come here and it's got to bleed down fairly quick. It can't, sit in this range between here and here, because at that point you're breaking over top of a 15-minute level, right? So, we profit cap this move and we see where the levels that make sense are, and we look at this top side, right? So that's kind of how you dissect the top side of this profit cap and what's happening in the moment versus what level's getting hit. Because if this level gets hit and it pulls back, that's one thing. If this level gets hit and pulls back, that's another. If we go all the way up here, we have to be aware, like it might be the best buy, but it might also be a relong if we start holding over top of this 92.21. So just some things to be aware of. And then, when you go back to your hourly chart, you can see, let's go right here, lovely button here. And you can kind of see where that profit cap exists. So that's that original 1 hour level we marked, and then the greediest part of that, and 2 levels in there, which would be your 15-minute, kind of the break rate before, because you also do have a 15-minute valley here that's back tested. So you definitely want to mark this 15-minute hold up right here, because you're going to have a couple different points of information. 15-minute level in either scenario, hit this and hold here for the 15-minute close, you're pooched. Hit this and hold here for the 15-minute level, it's okay as long as you don't break over top of this hourly, right? So you kind of have this understanding that you've got the hourly here, and the two levels of important data that what it means if it's breaking over top of it, right? So get rid of this, get rid of this, get rid of this. Should just use trading view for this stuff. It's so much better. Yeah, two very important levels here, right? Again, hit this level, fall below the hourly, kind of hold somewhere range between here. You might gain a 15-minute and then go for a second attempt here and then fall straight down, right? So that's a possibility, right? That's what's another possibility? Let's talk about some different possibilities here. You hit this level here, you pull straight down and you never regain it. So you just actually finish your move and that slowly falls down. So you do attack the 15-minute and the 1 minute inside of that 15-minute range, and you kind of fall straight down. You go up straight here, you hit this, lose the hourly, hold the 15, right? Create some kind of little inverse that creates a trend like this, but then start holding this and gaining that 15-minute, giving you a second attempt on this level, which at that point likely going to break up, right? So at that point likely going to break up. Another scenario that could happen is you set your buy here. It just goes straight for the hourly and falls straight down and never, hits it a second time and then falls straight down. Never goes after it. Could blow all the way up to here as another scenario. Start obviously holding over top of this, lose this, but then regain this, something like this, and break up, right? So there's quite a few different scenarios here, but it all depends on, like, what's going to happen is all dependent on which level is hit first, whether it's this one, this one, this one, or this one, because they're all going to have different thereafter reactions, right? Hit this, you don't want to gain that hourly level, right? You don't want to be holding a high range here. Pay attention to timestamps, right? You hit the next greedy hold level, which is this one, here. You definitely want to be mindful that it can go up a second time and hit this. So, if you start closing inside of this range, be careful for obvious reasons, because it could just go after this and then fall down. It could also alternatively go after this and then move up as well. Let's delete some of these brush strokes. Now it's getting a little messy here. Other possibility, you hit the 15-minute level right here, right? Not the greediest part of the 15, but the 15 itself. Move either fall straight down, or it could come back up and create kind of this trend like this and go after the next part of its range, right? Which could be here, which could be here, which could be here. Like, it could be any one of these three after hitting the hourly. So it could just be a simple, it just went slightly over to the 1 minute, it fell straight down, because it is actually respecting that 15-minute ladder, right? Just like this right here. Get rid of these. You really should be doing this on TradingView. This is getting a little cumbersome with all these lines, but it's okay. We're going to be done with these brush strokes soon. Which this here, 15-minute level here gets held. This could have went after that same thing, where it just deep dives the 1 minute, or just goes after something on a smaller time frame, maybe like the 1 minute inside of that right there, and still respects the 15. So yeah, you have a couple of these different areas marked on the top side, and the first one that's hit will give you a lot of information, right? Like it'll give you a lot of information about what's going to happen thereafter, and you can kind of see how the reaction is developing. I'm not sure what this is. Maybe it's an even smaller time frame. I'm not sure, but I'm going to take it off because I like that range up there. Then this, same thing on the bottom side. We have a few different levels here. There's a 5-minute level here for the range cap. There's a 3-minute level there. And then I have a 1-minute super greedy down here. My buy is, of course, it's always at the greediest level. Just rather not be in the trade. I don't like taking the risk of it possibly going up and after another level there. Where is my... There we go. I just didn't go down far enough. And, the 1-minute level right here. So yeah, you've got kind of this different set of moves, 5-minute, 3-minute, 1-minute. So yeah, as always, I just go after the 1 minute. Really, you could even deep dive that 1 minute down to a ladder point off of this. So 89.35 versus 89.91. Yeah, sure. Why couldn't you go after like 89.55, which is this right here, right? So why couldn't you deep dive this 1 minute level to here? So always going after the greediest level is important because you could deep dive anywhere between this level here and this level here, right? Like this kind of this wick of this candle, or just psychological level, just some type of deep dive, or there also could be a trend here. You won't go after this because you're going to ladder off of this, right? You're still going to ladder off of this part of the move. You're not going to go down to trend here, but you very well could go at the ladder point, which means that you could, let's get rid of these brush strokes again, get rid of them all. Yes, one at a time. Click delete, which means you could just simply ladder off any point here. So you could even say like 89.46 could be it, or this right here, 89, whatever this is, 89.55, and then so front run this level a little bit, 89.56. So yeah, you could go to 61, 89.61, which basically brings you to right here. What this might be like a micro hold that's holding the move. So you could go 89.64 or 65, right? So there's any kind of justification you can make to deep dive the level. The point being is if that does happen, you definitely don't want to be at the 5-minute level up here at 9,000. Running a chance of liquidation there, depending on how deep it dives. Our level in the past year was 89.51, I believe it was, and this went all the way down to 89.36, or maybe it was a little higher. I can't remember what the level was, but we had bought this. It was something in here, and then it deep dove its level a bit and ended up holding it over top. It was I believe it was like 58, 89, 50. I think it was right here. And then it ends up falling down another 30%, right? So just 25%. Just the speed of the move is just why that happens, but it doesn't always happen. But that's fine. Anyways, the level gets hit, respected. And that's a bit on the range of this move. So we're going to kind of move on to trends here and talk a little bit about trends. But I think it was important to understand where this move is so that we can understand what these trends are doing, right? So let's take a look at trends. So trends have a very unique way of acting. We're going to bring up XBT for this. 1 second here. Just going to bring up XBT. Not XBT, but the perpetual charts here. Might be a little easier to do it on this. Okay, so I'm not sure what this is. We're just going to remove all these drawings. We don't need them. Something from the past there. And we are going to start to just use the hourly chart to develop some stuff here. So we're going to mark that 1 hourly level right here. And that's all we're going to mark. That's all we need. You have an hourly hold here, but that's not really what's going on right now. There's some base of the move that was created here, but it's not really a base yet. It's still just trying to find where its ladder point is. So that's fine. We're just going to use this. With trends, you have kind of an interesting reaction here. You have a move that gets developed. Okay, so we're just going to go to the bottom of this move, and we're going to find that 1 minute level that we had looked at. It was from the range in the past, and we had marked it. I believe right here is where we set our buy, 89.63. And then we had this one down here. There was 89.47. I know that's the level because I remember it. So we're going to mark this first because this is going to be important for this lesson. So we're going to go to a 1 minute chart here. And we're going to find the greediest points in this move. And so you had this right here, 47. You had this one right here, which was 60. So this is where we bought 89, 60. So you have these two super greedy levels, and then you have nothing back here. You may have something that would have been the base of the move here. Possibly this is the base of the move long term. Yeah, that does actually look like what would be the base of the move. So we're going to mark that one a different color here. We're going to go with an orange, sure, or peach, that's fine. Maybe we'll do whatever this color is, make it a little thicker, and take our replayer tool off here. Go back to where the move had happened. Use our replayer tool, go right here, and take a look at what actually had happened here. So we have our levels there. 89.61 is where we had bought, and so it takes a first bounce, and obviously that's going to be the level that's respected 40%. It falls down and then just kind of pulls away, right? And so now we are setting a buy right here and looking forward to do that. So there's kind of something interesting that happens here when you have this move developing. You have what is giving you trends longer term in the move. Okay, so every time you create a trend, what's happening is the longer this is holding, the longer it's creating a trend, right? So we've kind of talked about this a bit in the past here before. So you have kind of like a 1 minute trend here. And this almost acts like a pendulum where it's starting on one side and it swings all the way to the other side. And this is where it starts and this is where it ends before it starts to swing back and go after this. So for example, if this was a 1 minute candle and this was say a 4 hour candle, it constantly is making new trends all along the way. So it makes a 3 minute here, makes maybe a 5 minute here, makes maybe a 15 minute here, makes maybe an hourly out here. So 1H out here, maybe make some other time frame that we missed, the 30 minutes or a 2 hour or 90 minutes or something. It ends up at the 4 hour and then starts to break its 4 hour and goes after the 1 hour, goes after the whatever. If there is another time frame, we'll just call this like the flex. Like maybe there was another time frame. I don't know. We're just, just go with it. This is like the flex, maybe 90 minute or whatever, goes to 15, breaks the 5, breaks the 3, breaks the 1, right? So you kind of have this swinging motion with trends where it creates all these different points before it starts to re-break that way, right? So then you have the creation and the beginning of the break. So that's what that stands for. This is the creation C and the we'll call it the BB, the beginning of the break, just for whatever. We're just making this up on the fly, right? So we're just going to delete these brush strokes and kind of walk through this. So when you have your kind of first trend here on the 1 minute, this acts as your trigger point, kind of distribution candle, and you have the first kind of break of this move, right? So you have, oh, okay, look, we broke the move down. This is going to try to stabilize against the actual trade, right? So then, you hard close and you would go to the 3 minute here like this. Actually, the 3 minute doesn't hard close till right here. So then you have your next piece, right? That's going to try to stabilize. And this is still good as long as it's kind of holding this hold level, right? It's still kind of creating its move. And you can see where this is. Did we miss something here? Oops, let's try to do this again here. 1 minute to 1 minute, creates a swing. So it should be right here. Yes, right there, the 3 minute. So then this is the base of the 3 minute move. And it breaks that right there. So then you can go to the 5 minute, and there's no 5 minute yet, right? Until it's created here. So then you have the 5 minute is created, right? Kind of step forward in this trade. And next trigger point there. And that's kind of the finishing of the 15 minute, which is right here, right? So you're creating these trends and it's stabilizing the move over time. There's probably no hourly created yet. No, it's just simply the hourly right here. And then so you're going to have this breaks down and creates an hourly somewhere. Yeah, it's not quite done yet. Something like this, but it's not, you can see it's not finished yet. But anyways, for now, that would be fine. There's your hourly, right? There's your hourly trend. We haven't talked about interior trends yet, so that's fine. And there's where your hourly trend breaks, right? So that's where your hourly trend actually breaks. Do you have a 4 hour yet? Yeah, you don't. It's not, the swing of the move isn't done. It actually is. So it's hard closed there. And you haven't quite hard closed this trend yet to create the next trend, but you also have something else here. You have an interior trend, right? So you have where the move starts to stabilize, right? Like you start to stabilize here. So you can kind of go back to your 1 minute charts here. And you can see this is where the move starts to stabilize its final test and then comes back up and holds its move, right? So you kind of have this beginning, you have the beginning of what would be your trend pendulum, if you want to call it that. And this hard closes out to here, which then hard closes to here. And you get your trend. We're going to mark this on the hourly here. So you have an interior trend, right? Like you have an interior trend. You're going to have one on the top side too. Like we've done this before with trends. Interior top side, hard closes here, hard closes to here, right? So you have, we're going to delete this quickly for one moment. And so you have your trend wedge, right? Like you have a wedge on this side, a wedge on this side. Looking at what this can actually do. So you can see where your interior trends are deciding this piece of the move, right? Because that's what interior trends do. They decide kind of where a move is going to go, right? So this is very much considered an interior trend because it is just created for the pitch of this move to see on which side this is going to be breaking out. And I wonder if this is actually on the 4 hour as well. It is on the 4 hour actually. Here's your 4 hour level right there. This would have actually been the 1 hour adapted to the 4, which is fine. It's the actual piece of move. And I wonder if there's a 4 hour on the top. And there is actually right here to here. So we had to actually have started on the higher time frame down for the interior trend. But what's interesting about this is that this move will stabilize over the course. Go back and add this trend right here, right? This will stabilize, and we're going to color this one. We'll do this one in, this kind of pink color. This will continuously create that trend until it starts to break, right? So you can see it here, and it broke the 4 hour. You have the 4 hour that hard closed to here, I believe it was. So let's hard close the 4 hour. We have this here, hard closes to here. No, that's right. This hasn't hard closed yet. So we need to actually check the 12 hour and see if there's a 12 on this, which there is. So actually the 4 is perfectly fine here. And you can see where the 4 is starting to break down, right? So you've on one side created the 1 minute, you've adapted it on the 3, you've moved down to the 5, you've moved down to the 15, you've moved down to the hourly. Now we're at that point where we've started this trend on the distribution candle, and we actually are looking at that 4 hour now. And it hasn't technically hard closed, but now it's starting to hard close lower time frames, right? So now we can actually hard close this on the 1 hour, which is to here, right? You could say to here, the first hard close, but the move isn't done. So you actually have to go to here, right? And now you can go to the 15, and there's no hard close on the 15. So when you start to lose this trend, you're actually breaking down the time frames on a lower landscape, right? So let's get rid of these brush strokes, clear this up.